morning, everyone. This is Leslie Pergossum, the Business Development Manager with Vesta Property Services. Thank you all for joining us this morning for the Condominium Board Member Certification presentation. We will go ahead and begin. We have our panelists today, Brenda Grochowski, the General Manager for the Melbourne office, and John Carrigan with us this morning. So I will go ahead and turn it over to Brenda now.
Good morning, everyone, and thank you for attending today's webinar for Condominium Association Board Certification. I am Brenda Grochowski with the Melbourne office of Vesta Property Services. We handle management for condominiums and HOAs throughout the state of Florida, 17 locations, as a matter of fact, and over 250,000 residents and owners. Today, we're privileged to have John Carrigan. He is with Ross, Earle Bonan Ensor, PA, out of Stewart and Vero Beach. He is a shareholder in the law firm and board certified in condominium HOA and plan development law. Their firm represents over 600 condominium and homeowner associations up and down the East Coast. And he's concentrated his practice in community association representation going back to 2009. John, I welcome you today and appreciate you being here with us. And I'll just turn it over to you.
So good morning, everyone. I see we have a whole bunch of participants, so thank you for coming for today's webinar. I do want to thank Vesta and Brenda and Leslie for giving me and our firm the opportunity to appear today and give a DBPR Board Educational Certification course to you all. Whether you're an existing board member, longtime board member, or brand new to the board, we're going to go through the nuts and bolts today of how to operate a condominium association, cooperative association under Chapter 718 and Chapter 719 Florida statutes. If you do live in an HOA, I certainly welcome you to continue to attend, but unfortunately you will not get the certification certificate you need. That's an HOA seminar, different slides, different law that applies. So as to condominiums and cooperatives, I am going to go ahead and attempt to screen share here and see if I can show you all our PowerPoint. Give me 1 second. Again. All right, can you all see the first slide up there?
We can see you, John. Thank you.
Perfect, okay. So this is the Condominium and Cooperative Board Certification course. Just a little roadmap as to where we're going today for those participants that are online. It's about 80 slides, I think 82 slides. It's about an hour and a half to an hour and 45 minutes. There is a Q&A box that you guys can type your questions into as we progress through today's presentation. At the end of the presentation, Leslie or Brenda will assist me in going through those Q&As. Always good to get some free legal advice while you're at a seminar. So I'm happy to go ahead and stay here and answer those Q&As as they come in. As talking to the topics that we'll touch on today, 718, 719, Florida Administrative Code 61B, 21 through 23, very broad. Can't cover everything in 2 hours, but we're going to hit the topics, one, about the day-to-day operations of the association, and two, what to look for as far as pitfalls and enforcement. So kind of the stuff that I see most often, and board members come to me and say, John, how do we address this particular issue? We'll go through budgets first. A lot of accounting terms in there, operating, reserves, proper notice, stuff like that. We'll get to elections, which you all have gone through, but we'll talk about how they're set up and how they're run for when you run for re-election, of course. We'll talk about official record requests. What types of records do you have to keep, and what types of opportunity to inspect do you have to provide to your members. We'll end up with dispute resolution. What happens if somebody's not following our rules and restrictions, John? We'll answer those questions. And then lastly, I will give 2 to 3 slides with the latest statutory update. The Governor DeSantis and the Florida legislature pushed through a lot of legislation this year. I cannot cover it in 2 slides. It's its own PowerPoint presentation, which maybe we'll give it some other time. But at the end of today, This PowerPoint presentation can be made available to you all by contacting Brenda and Vesta or our office directly. And we can provide a copy of our latest, what we call the Reb Law Review, which is the latest and greatest as to the statutory updates that became effective July 1st of 2021. And of course, if you have any particular questions or concerns after reviewing that, reach out to your property management company, reach out to Vesta, or reach out to my office, and happy to discuss more in depth those statutory updates and how they may apply to you all. So with that being said, let's jump into it. Why are you here? 718.112.2D4B. Who can remember that, right? Says within 90 days after being either elected or appointed to the board of directors, board members have to do one of two things. One, they have to execute a self-certification form, which is a statutory form. You can find it on the DBPR Condo website. But essentially, it says that you agree that you've read the association's governing documents, written policies, that you will work to uphold such documents and policy to the best of your ability, and that you will faithfully discharge your fiduciary obligations owed to the association. So that's option one. If there is not an educational course available within 90 days, I always tell clients, let's get that form signed, filed with the secretary, put in the official record so we don't run into any issues. There is an educational course, which you're here today, of course, to get your certificate. Then you can attend the certification course and you do not have to execute the self-certification form. A director who fails to timely file the self-certification form, which there should be no excuse, you should be able to do that, or attend an educational certification course, is suspended from the board of directors until they comply. I have not run into a situation where we can't immediately remedy when this issue is brought to my client's attention. So the suspensions are few and far between unless somebody doesn't want to sign the self-certification course. So not really an issue. I think it's important, though, the statute clarifies that if it is discovered that a member was elected in March, for example, and we're now sitting here in August and they haven't done the self-certification, and they haven't attended an educational course, so we're outside the 90 days, any board action taken outside that 90 days is not subject to challenge, even though they hadn't complied with the self-certification or educational course. So very clear on that one. It doesn't unwind any of the board action. But of course, we want to comply with the statutes. That's important. So the secretary needs to retain the director's written certification or the educational certificate for inspection for 5 years after your election. So that will be placed in the official records. Forgot to mention in my opening, but you will receive approximately a week after this course, we'll get the attendance sheet. It looks like we have 49 people present today of who attended, and our firm will provide you an educational certificate. You'll get that in the email, and you will then place that in the official records of the association, and you've satisfied your obligations. There is no requirement that you attend one of these every year. You only have to do it once. But that being said, there are always statutory updates. There's always tweaks to the law through judicial decisions. So I do recommend to my clients, attend every year. It's an hour and a half of your life, and it's only going to make you better. And you can throw in a few questions to the attorney while you're there. So we'll start out with condominium budgets and reserves. Get this out of the way. So what is a budget? A budget is a map that will guide the board in making decisions during the course of the year. It's a formal plan of estimated future expenditures, underlined, bold, estimated. A budget is what we expect to spend over the upcoming year. It is not set in stone. Things come up throughout the year. There's a hurricane, we have extra cleanup. We run into litigation, we have unexpected legal fees. We have to undertake, repairs to the building that we did not expect. So it's an estimate. It is not set in stone, but you need to execute your fiduciary obligations and develop it in good faith as to what you expect to be incurred over the year. So the first thing we look at, and if we talk about budgets, we look to 718.112 Florida statutes. That's under Chapter 718 of the Condominium Act. We also look to 61B 22 of the Florida Administrative Code. And most importantly, and for my board members from a practical perspective, I looked before I hopped on the seminar today. If you Google DBPR Condo Budget, the first thing that pops up is an 81-page guidebook, which I'm sure you'll love to go ahead and read, outlining everything that I'm going to talk about over the next 5 or 6 slides about operating budgets, about reserves, about providing proper notice. It's in-depth and invaluable for my clients to go ahead and take the time, especially the treasurers in conjunction, working with the managers, to get an understanding of what is a condo budget, how do we develop a condo budget, and how do we get it passed. So go ahead and feel free, if you have the time, to take a look at that, or at least have it available to reference if a particular question comes up. And then certainly work with your management company. They are the experts on the ground, and they do this for all their clients in developing a budget. So rely on your manager, work with your manager to get that put together. But the first thing we need to talk about is, how is a budget adopted before we get into what is a budget. A budget is adopted at a budget meeting. This is a board meeting in most instances, where the board provides notice to the members along with a copy of the budget at least 14 days advance of the board meeting where the budget will be considered. And that budget must include not only operating expenses, that's your day-to-day expenses, right? Utilities, water, electric, landscaping, management fee, and so forth, but it also must reflect the reserves, the long-term deferred maintenance items component of the budget. So you have to provide notice to your members, either through a written notice in the mail, hand delivery, or if they've opted in, electronic notice, and again, include a copy of the budget. Unless the documents call for a unit owner to adopt a budget, which is very, very rare, take a look at your bylaws to make sure that is not required. That's where it would be. The board must adopt the budget with fully funded reserves unless the reserves have been properly waived. Put a pin in that. We'll come back to talk about waiver of reserves and how that's done. But no, and I recommend to all my clients, best practice is always put forth a proposed budget that fully funds reserves. And if the membership wants to waive or partially fund reserves, I can walk you through that process. The official records, official records are the records of the association, the written documents. You need to ensure that both the proposed and adopted budgets have to be maintained as part of your official records. Meaning if somebody a year from now wants to come back and know what the 2020 proposed and ultimately adopted budget was, that should be easily producible to them as part of a records request. In addition, we talked about the notice that has to be sent to the members 14 days in advance of the meeting at which the budget will be considered, and a copy of the budget. You need to include an affidavit of mailing, typically executed by the secretary of the association or the property manager, confirming that that notice, that mailing did go out to the members and complied with the statute, something that your property management company, Vesta, can certainly provide you with as a form to go ahead and put in the official records and execute. So let's talk about the operating components of a budget. A budget must include estimated revenues, that's money coming into us from assessments, interest, insurance proceeds. Also includes, I'll call miscellaneous income, that would be late fees on unpaid assessments, pool tags, use fees, and so forth. That's the kind of money that goes in. That's the income component of your budget. And it must include, of course, the money going out. That is, of course, why we collect the money. So that money going out would be the money you pay to the state every year. $4, I believe it's $4 per unit has to go to the state to fund the DBPR. Insurance, fidelity bonding, so these would be insurance expenses. Obviously, you would have general liability insurance, property insurance, fidelity bonding, and so forth. Expenses would also include administration expenses, management fees, maintenance, rent, taxes, security provisions, and so forth. The DBPR guidelines contain templates for budgets, but I will tell you that to a degree, every condominium is a little unique. The townhomes that are 10 miles inland have different considerations than the the 10-story condominium on the beach. So every association is going to be a little unique. You can start with the template, but you have to go ahead and customize it to your community's particular needs. The other requirements, and again, this is something that's under 61B of the Administrative Code, is you have to have the beginning and ending dates of the period covered by the budget. Typically, those are either calendar year or fiscal year. So that would be January 1st through December 31st, or July 1st through June 30th. Some clients have a little unusual one, they'll end somewhere else in the year, but it should indicate the total time frame covered by the budget. The total expenses, including reserves on an annual basis, has to be on there. And at the very bottom, there's typically the assessments per unit. Assessments per unit are one of two ways. They're either going to be on an equal basis. So I have a 100-unit condominium and everybody pays 1/100th of the expenses. Or in the alternative, if provided in your governing documents, take a look at your declaration, bylaws, or articles of incorporation. Occasionally we'll get a client that does it on the proportionate share of ownership. Typically an exhibit attached to the declaration that says that the units on the first floor are each allocated 0.08333% of the overall ownership interest in the condominium property. So something your manager could certainly walk you through, look at historic budgets to go ahead and figure out whether you are in equal basis or proportional share. And if it does get complicated, always feel free to reach out to your attorney. If we represent you, happy to go ahead and help walk you through that. So the 115% rule, it is an exception that provides that if the budget year over year is in excess of 115% of the prior year budget, that there is a statutory recognized process by which the owners can force the board to consider an alternative budget. This only applies if we take a look at the operating in year over year and is in excess of 115%. Pretty unusual. My recommendation to clients is when we're preparing the budget, if we're over the 115% from the prior year, that we talk to the manager and talk to counsel about the challenges that could come forth. But even if a proposed amended budget is put forth by the members, very, very rare that it ultimately is successful. The calculation, you obviously subtract out reserves. So we're talking about year over year operating only, and the expenses not to be anticipated on a regular annual basis. So if you're in the middle of litigation and you put money away through your operating budget for a war chest, that would be an atypical expense, could be excluded. And then betterments to the condominium property. If you guys are putting in a new 9-hole golf course, right, as part of the condominium property, that would be an atypical expenditure and can be excluded from calculating the 115% rule and seeing if it applies. If the net assessments are more than 115%, subtracting out those three categories, then this is the process by which owners can suggest and put forth a substitute budget. You have to have 10% of the owners essentially sign a petition within 21 days after the board meeting at which the original budget is adopted. The meeting, if they submit the petition, the board then has to set a membership meeting 60 days after receiving notice of the petition. And at least 14 days prior to that membership meeting, the board must hand deliver to each unit owner notice of the meeting. And then in that membership meeting, a majority of all voting interests may vote to approve the alternative budget proposed by either the board or the membership. Failure to achieve the vote results in the board implementing the budget. So that's a lot of complicating factors, but practically let me walk you through what that means. I represent a client. The client adopts an operating budget that's 118% above last year's budget for some reason, right? We have the board meeting, the board adopts the budget. Within 21 days, we get a petition in the mail signed by at least 11 of the 100 unit owners, right? That then necessitates us to, as a board, set a special membership meeting within 60 days and send out notice of that special membership meeting to all the members, along with the board adopted budget and the membership proposed budget. And then at that membership meeting, not only do we have to establish a quorum, but a majority of all members must vote to approve the amended budget or the amended proposed budget, meaning that if I'm in a 100-unit condominium, 51 people have to vote for the alternate budget. Otherwise, the board budget goes into effect. So as you can see, it's a difficult hill for homeowners to climb. A lot of intricacies. People have to vote in the affirmative for it to be adopted, and as a result, very unusual for this to actually proceed. The biggest hiccup I get from a client's perspective is they don't recognize the petition for some reason. They don't set the special membership meeting, and then we run into issues with the DBPR and them investigating non-compliance with the statute. So just be aware, if you get the petition, that's when you need to call the attorney and have a discussion about what do we do. The next component we'll talk about is condominium reserves. Unlike the HOA, if any of you ever lived in a homeowners association, reserves are generally dictated by your governing documents in an HOA. Well, in a condominium and cooperative, they're statutorily imposed, which means that they're uniform to a degree for all condominium and cooperative associations. So the first question I get asked is, John, what's a reserve? Well, it's defined, so that's the good news. It's any funds other than operating funds. We talked about the operating component of the budget. So any funds other than operating funds, which are restricted for deferred maintenance and capital expenditures, including the items required by the Condominium Act. And we'll go over what those are in a second. And any other funds restricted as to use by the condominium documents or the condominium association. When I have clients that are developing the year's budget and looking at reserves, I always start by saying, well, let's look at the prior 3 years and see what our reserve line items were. Be a very, very good indication of what should be on this upcoming year's budget. And then we go ahead and begin to prepare it. A capital expenditure is also defined along with the deferred maintenance. It's for the purchase or replacement of an asset whose useful life is greater than 1 year, and the addition of an asset that extends the useful life of the previously existing asset for a period greater than 1 year in length. And deferred maintenance is any maintenance or repair that will be performed less frequently than yearly and will result in the maintaining of the useful life of the asset. When we get to the next slide, we'll give some examples. These are kind of broad categories so that the legislature could fit certain items in there. But I think when you take a look at this slide, it'll become very apparent what we're talking about when we talk about capital expenditure or deferred maintenance. These are the categories that have to be included in your budget. There's no ifs, ands, or buts. They're in there. It's roof replacement for the condominium, building, painting, pavement resurfacing. Those are the three that have to be in there for everybody. So that will be uniform. The way we customize this for clients, though, is any other deferred maintenance or capital expenditure in excess of $10,000. So, for example, if you have a pool, at some point those pool pumps are going to fail. My guess is they're likely in excess of $10,000 if you live in a significantly sized condominium complex, and therefore we should be putting money away for the ultimate replacement of those pool pumps or pool heater. Another example would be concrete restoration. As we know, in the Surfside collapse, concrete restoration, very, very important. It can be very, very expensive for those condominiums on the beach. We're talking about 6 or 7 figure repairs. To avoid special assessments, we recommend that clients consult with an expert to determine, is concrete restoration something we have to be thinking about, and develop a plan to understand when that has to be undertaken and how much that's going to cost. Other items would be pool resurfacing, pool decks. If you have a clubhouse, maintenance of the clubhouse. Those are all items that typically don't come up every year. They're typically in excess of $10,000 and go towards maintaining the betterments throughout the condominium property. Requirements regarding reserves. The reserves must be included in the proposed annual budget and shall not be waived or reduced prior to the mailing of the unit owners of the proposed budget. And reserve schedule must be included within the proposed budget. We'll get to in a second what a reserve schedule looks like, but just know that when you send out the original notice of the meeting, of the budget meeting, and include a copy of the budget, it has to have reserves on there. No ifs, ands, or buts about it. It's got to be on there. Again, put a pin in the waiver of reserves or partial funding reserves. There will be a slide on that. But no, at the beginning, it has to be on there. Reserve calculations. And again, there'll be a slide and we'll go through and practically talk about how this is calculated. But know that we need to know these components. The total estimated life of the particular item or improvement, the remaining estimated useful life, the anticipated cost to replace or repair, and the anticipated beginning balance in the reserve fund. So those are the components we need to go ahead and take a look at. In clients, the question I always get is, well, John, how do we do that? How do we figure out this information? Really, two options. One is either yourself or relying on your manager, go out and get bids from a contractor who deals with roofs, that deals with pavement, that deals with building repayment, at least every few years, to make sure, one, we know how much it's going to cost when this particular item comes due, and two, how often it has to be done, and three, how many years do we have left? If we can get that information from a contractor at least every few years, in my opinion, you've met your fiduciary obligation. The alternative is to every 5 or 6 years, get a formal reserve study done. Those are third-party companies that come in, identify capital maintenance expenditures or deferred maintenance expenditures within your community and prepare a formal report that answers all of these questions on this slide. It's a few $1,000s to do, so I think you need to take a look at your budget and determine whether you want to do it the informal way, just getting contractors to come out, or do it the more formal way. If you're a larger condominium complex, I generally recommend a reserve study. I think it really insulates the board from allegations of not doing your job. But again, if you're a 10-unit condo, not near the beach, probably not as important to get it done, but we do need to know these particular information when calculating the reserves. There's two methodologies to reserves. There's a straight line method formula, and in the next slide, we'll indicate and we'll go through how this is all calculated. But know that this relates to particular categories. So we have categories for roofs, painting, road resurfacing, and over $10,000. So let's say, for my example, pool, right? So what we do is we have a line for each one of those components, and every year we save so much money for each one of those components. And when that particular item comes up for repair or replacement, we should have enough money in that particular line item to take care of roofs, to take care of repaving, to take care of building painting, to take care of the pool. There are some disadvantages to the straight line formula, though. What happens if we get to year 7 or year 10 of the roof, and the roof is failing and requires a replacement? We had estimated 15 years. We're not going to have enough money in the roof line to go in and pay for a new roof. And so that puts the association's board of directors in the position of saying, well, how do we come up with the rest of the money? Well, option one is to levy a special assessment, which nobody likes. Members aren't going to like. The board members are going to get pushback from the members on that. The alternative is to borrow money from another line item, but that requires a meeting of the membership. That requires you establish a quorum at that meeting, and that requires that you obtain a majority vote at that meeting at which a quorum is established. So regardless, if you use the straight line formula and a particular deferred maintenance item or capital expenditure comes due prior to, I'll call it the maturity date, you're going to have to go to the members and get the permission either for a special assessment or to move money. So there is not a lot of flexibility when it comes to the straight line methodology. And I think when we take a look at the next slide, you'll get some more context. So in this particular example, we talk about roof, we talk about resurfacing, building, painting. In this case, in our example, we have an elevator that's going to have to be taken care of. We also have a clubhouse roof replacement and walkway improvements. So let's pretend in our example that we had a reserve study done. These are the items that were identified as something or things that we should reserve for. That second column over that talks about the estimated total useful life, that is the life of the particular component, not how much it has left, the life in total. So in this case, our expert said that roof is a 12-year roof, and every 12 years, we should be replacing that roof. Pavement, 18 years, building painting, 5 years. These are how long that particular component is going to require before it needs repair or replacement. The third column over is the estimated remaining useful life in years. So this is how many years do we have left? So for example, in this hypothetical, the roof is a 12-year roof. We're in year 1. So that means we probably replaced it in 2020. We're now in 2021. It's 1 year old. In this example, road resurfacing, every 18 years, we have to resurface the roadways in the condominium complex. We're on year 7. So that means that we have 11 years left until the roads will likely require replacement. The fourth column over is the cost to repair, right? So this is the item that when we get bids, or updated bids, or do a reserve study, may change from year to year. A roof replacement for a bid that we received in 2015 of $95,000 probably is not as accurate as we sit here in 2021. It's probably more as we sit here today just because of inflation, 3-4% per year. So you have to go ahead and update these, not on a yearly basis, but every few years when you get a reserve study done or get a new estimate, we have to make sure that we keep these up to date. Excuse me. The fifth column over is how much funds we have on hand, right? So in this example, the roof is a 12-year roof. We're in year 1 of its life. We know, or we just got an estimate that it's going to be $95,000 to replace. We know that, I'm sorry, let me back up. I misspoke. This is how many years are left, not their year 1. So I misspoke. We have 12 years roof. We have 1 year until it comes due. We need $95,000. We have $87,000 in the kitty, and we have $8,000 to get there. So please forget the past 2 minutes when I was giving the other example. In this example, in the pavement resurfacing, total useful life 18 years. We have 7 years left. We need $55,000. We have $30,000 in the bank, and we know that if you take the difference, right, 11 years in this road resurfacing, that's about $3,500 per year that we need to go ahead and put away per year. This number down here at the very bottom right-hand corner is the totality. So for each line item in our straight line reserve, we know we need $8,000 this year for roofs, $3,000 for resurfacing, $18,000 for building painting, $800, $3,000, $3,000. The total here is the total amount of reserves we're collecting throughout the entire year. So $36,312. If you divide that by 100 units, I think you come down to about $360 per unit that they would have to contribute. So the other option when we talk about reserves, and we talked about straight line reserves, and that's what this example reflects, is a pooled reserve. So a pooled reserve looks more at this $36,000, this $206,000, and this $352,000 more than the individual line item components, right, of how much we have in the kitty. And what a pooled reserve allows you to do is when a particular deferred maintenance item or capital expenditure comes due, we can reach into the reserves in total to go ahead and pay for that. So in a pooled reserve methodology, we have $206,000 as we sit here today in our reserve account. If one of these components comes due, we can look to that full $206,000 to pay for that. We do not have to say, oh, well, we only have $87,000 for the roofs, or we only have $30,000 for the road resurfacing. No, we have $206,000 for any of the components. So a pool reserve means that the association can have a singular source, that $206,000, to pay for multiple categories of expenditures. And as an example, if the association establishes a pooled reserve for the roof, building, and pavement resurfacing, the funds can be drawn for any of them when those components come due. So the question becomes to clients, when does a pool reserve particularly important? Well, if we're talking about the elevator repair and modernization in this example, we have a 25-year useful life. We have 14 years left, but it breaks and we have to replace it this year. Well, it's $20,000 to do it, and we only have $8,800 in the kitty, John. What do we do? Well, as I gave the example before, we have to go to the membership and we have to get permission to either move money from another account into the elevator, or we have to levy a special assessment. With a pool, I have $206,000 to play with. So I know I have enough money there to pay for the immediate work on the elevator repair and modernization. I don't have to go to the membership. The board can authorize any of the $206,000 to go to that elevator repair and modernization. So a lot of flexibility there. Now, that doesn't mean at the end of the year we have to recalculate all of the different categories to make up for the fact that this came due early. We do, but it gives us immediate access to cash without having to go to the membership. And I'm going to go through the next couple slides, the pooled method, but just understand that at the end of the day, it's access to cash without having to go to the members that is the advantage here. The only disadvantage I've seen in the pooled methodology is that you typically have to have an accountant do these calculations. You have to have up-to-date estimates as to the replacement or repair cost and the remaining useful life. So reserves. Reserves under 718.1.2 can only be used for authorized reserve expenditures unless there's a use for other purpose is approved in advance by a majority vote at a duly noticed called meeting at which a quorum is established. So whether we're using straight line or pooled, we cannot take money from the reserve account and apply it to an unexpected operating expense. Now, if it's a reserve item, we can certainly use the money. But if it's to cover an operating expense, you cannot. To pull money out of a straight line or a pooled reserve, you have to go to the membership and get their vote if we're going to apply it to an unexpected operating expense. Commingling. This is under the administrative code. The portion of the periodic assessment that are reserved must be deposited in the reserve account no more than 30 days from the date such funds were deposited. So what this means is if my assessments are $1,000 per quarter and 300 of that goes towards the reserves on the budget, when the association collects that money, if they collect it July 1st, they have till July 31st to put that money in the reserve bank account. It cannot stay in the operating bank account. And expense categories that are not restricted as to the use shall be stated in the operating portion of the budget rather than the reserve. Essentially, this precludes slush funds. You can't have a reserve account that says miscellaneous. So if you do have that and they're not restricted as to use, it's essentially a rainy day fund that cannot be in the reserve component of your budget. That has to go ahead and be in the operating portion of your budget. And what that will result in practically is either a carryover or surplus going into the following year. Reserves not required by statute. So the association is permitted to go ahead and put money away for expenditures over $10,000 that are not taken on a yearly basis. The formula does not have to be the statutory formula, but I am telling you and recommending to you that you use the statutory formula for simplicity and must show the reserve calculation in a separate reserve section of the budget. So if we want to put money away for other components other than required by statute, you can do so. I'm recommending you follow the statutory formula, and they have to be in a different line item than the statutorily required ones. Now, we have been mentioning in several sections the waiving of reserves or the partial funding of reserves, something that I do not recommend to clients because this ultimately results in, when that component comes due, a special assessment being levied, which is not fun for anyone. But there is a methodology by which it can be done. It has to be done at a unit owners meeting. The vote required is a majority of those present at a meeting at which a quorum is established, which is distinguishable from a majority of all, right? So just know it's a lower threshold. And then the vote only applies to one fiscal year, meaning that we can't vote at the upcoming membership meeting to partially fund reserves that we're going to partially fund for the next 5 years. It has to be done annually with each budget that is adopted. If the association decides to proceed with the waiving of reserves, you have to include the following disclaimer on the limited proxies that are mailed out and put it on the ballots. And it says waiving of reserve in whole or in part or allowing alternative uses of existing reserves may result in unit owner liability for the payment of assessments, and essentially special assessments are coming. We see this a lot in communities that are either transient or elderly people that try to time it right. I'm not going to be here when the special assessment comes due, so why do I care? I want to pay less today. I can see why some people want to make that argument, but for the long-term health of the community, I think it's important that you fully fund reserves. And I can tell you that post 2008-2009 crash, a lot of lenders are looking into the financial health of the association, and in particular reserves, when deciding whether to issue loans in a particular community. And if they see that you have underfunded or partially waived reserves, they may decide that they're not going to provide a loan to a buyer to purchase in that community, because they is a riskier loan. If a special assessment comes due and that borrower cannot pay, it's a riskier loan overall, and they may decide not to lend in there. So fully funding reserves, I look at it as another way of ensuring continued marketability of homes in your community. So that brings to conclusion budgets and reserves. The presentation only gets more exciting from here, so please hold on. Now we're going to talk about elections. This you're going to look at, again, 718-112, but we're under 61B-23 of the Florida Administrative Code. You may look at your bylaws. You may look at your articles of incorporation. They may dictate how elections are in your community. I can tell you that for the most part, those provisions don't matter. The Florida legislature made the decision many years ago that we wanted elections and eligibility for candidates to be governed by statute. So unlike in the HOA context, in the condominium and cooperative context, elections, candidacy for the board of directors is dictated by statutes, not by your governing documents. So candidate eligibility. To be eligible to serve on the board, you must be eligible at the deadline to submit your intent to run, which is uniform under the condo and cooperative statutes, 40 days prior to the election. You are not eligible if you are delinquent in any monetary obligation to the association, which means that if you haven't paid a fine, if you haven't paid an application fee, you are not eligible to be a candidate that appears on the ballot for the board of directors. So always call the management company, say, am I up to date? Just want to make sure so we don't have an issue. You can't have any felony convictions unless your civil rights have been restored for at least the past 5 years. That is not a blank check to run a background check on all the candidates. That's not what I'm saying. But if there's information that comes to the board's attention that would indicate that a candidate does have a felony conviction and civil rights have not been restored, pick up the phone and call the attorney and have them investigate and provide a result to you on that one. And in an association of more than 10 units, co-owners of a unit may not serve on the board at the same time unless they own more than one unit. So if you're larger than 10 units, husband and wife who own a single unit cannot both run for the board of directors. Term limits. So this is a statutory update. In 2018, the Florida legislature came out and said that association board members have an 8-year term limit. And once you get beyond the 8 years, you have to achieve a 2/3 vote of all votes cast in order to continue serving on the board. The thought behind this term limit is they want to get fresh blood into the board of directors, or encourage fresh blood to get into the board of directors. I could argue the other way, that the people that have been there a long time know where all the bodies are buried and are some of the most influential and knowledgeable people about the association and the best interests of the association. But this is the statute that's in effect. As of July 1st of this year, this statute has been amended to clarify that when we look back and say the 8-year term limit, we only start from the effective date of the original statute, which was July 1st of 2018. So if my math is right, we really don't need to worry about these term limits until 2023. I think that would be, maybe it's 2024. July 1st of 2024, an election thereafter. That's when we need to start discussing, you've been on the board, served continually, you have to get a different vote than the plurality vote required of all the other candidates, because you now have to get 2/3 of all the votes cast to continue serving on the board of directors. So just be aware of that, something that if you continue to serve, we're going to have to think about in the forthcoming years. Elections must take place as the first item of business at the annual meeting. What's interesting is that under the statute, the election of directors in the annual meeting are actually considered as two simultaneously occurring but distinct events, right? So the election of directors is the first item of business when you all gather. The collection of ballots, the appointment of the committee to open the outer ballots and to ultimately count the ballots is the first thing on the agenda. Once that is taken care of, that's when we move to the agenda for the annual meeting and proceed down with president's reports, treasurer's reports, Q&A with the membership, and so forth, other amendments that may come before the membership. But the first item of business is the election. The election is not required under Florida statutes if the number of vacancies equals or exceeds the number of candidates. The candidates will simply become the board members effective upon the adjournment of the annual meeting. So practically what this means is if I have 5 open positions and only 5 people put their name in the hat by the 40-day deadline to apply to be a candidate to the board, I know that when I go into the annual meeting, there is no election. Those 5 people will simply go ahead and take their seats at the annual meeting. Now, if I have 6 candidates, I have to have an election. So be aware of that. At least 20% of the eligible voters must cast a ballot in order for the election to be valid. If for some reason you fall under that number, important that we go ahead and adjourn the election and annual meeting and reschedule. At that point, you should be with counsel to walk you through that process. You must have additional blank ballots and envelopes available using the double envelope system. So what this means is when your manager's conducting the annual meeting and election, when those people go to sign in, if they have not already sent in their double envelope with their ballot, they should be able to be provided one at the check-in. And importantly, it's now a 3rd-degree felony to forge ballot envelope and voting certificate. Very, very rare that we run into this, but it is important for not only board members, but individual members of the community to know there are now criminal implications in interfering with an election of a condominium or cooperative association. So one of the most important slides that you all need to know heading into election is the 60, 40, 35, 14-day timeline. This is uniform, regardless if you're a condominium or cooperative, it's dictated by statute. At least 60 days in advance of the meeting, letter has to go out to the members stating the date, time, and location of the election and the deadline to submit your intent to run forms. Typically, I include the statutory intent to run form in this first mailing so people can simply turn it in. But that's the first notice that has to go out. It has to be 60 days prior to annual meeting. 40 days prior is when those people who want to run, they have to submit their intent to run forms. If they turn it in day 39, it does not count. The question I always get is, well, John, what if they email it or what if they fax it? If that's how you accept other association correspondences, that is acceptable. So it does not have to be hand delivered, does not have to send via certified mail. If you typically accept things via email, which I think is how most of the world operates today, then that 40-day deadline would apply to email or facsimiles. 35 days is when the candidates have the ability to submit essentially their candidate information sheet. Think of it like a resume, a one-page resume. They get an 8.5 by 11 sheet of paper to explain and make their argument to the membership as to why they should be elected. They can put whatever they want in there. If they want to bash another candidate, I never recommend they do that. It should be about why you're a good candidate, but I've seen negative ones go out too. But they're entitled to go ahead and put that information on there. And the association should simply make copies of that candidate information sheet and mail it out with the second notice of annual election. And then finally is the 14-day notice. At least 14 days, but importantly, not more than 34 days prior to the annual election, the second notice of annual election has to go out stating the date, time, location of the meeting. And that is the package that includes the double envelope system, that includes the ballot, that includes the candidate information sheets. So when you take a look at this timeline, the association's obligations are at 60 days and 14 days. The people that want to run for the board are the 40 and 35 days. You need to be aware of that, association, that these are the deadlines, but the obligation is not on to you to tell these people, hey, we haven't gotten it yet. I simply say that you need to follow those deadlines, and if they don't meet the deadlines, then they will not be a candidate, or if they don't turn in their candidate information sheet in a timely manner, it will not be mailed out with the second notice of annual meeting. So I went through those pretty quick, but the next couple slides essentially explain that. So we'll jump through those. The association has to distribute this candidate information sheet. And importantly, I think I made this point, but you cannot alter, edit, or otherwise modify the content of the candidate information sheet. Your job is simply to copy it. And then again, the 14-day notice goes out. So election ballots. I run into issues every year, so I like to just go over this slide. It must list all candidates in alphabetical order by last name. That's the statute. It's a simple thing to do. Let's not foobar the annual election by not doing it by alphabetical order by last name. I had 3 of them last year that we had to move simply because of that. Must not indicate any incumbents, right? So it's a level playing field. There are no write-in candidates because you're not eligible unless you submitted your candidate application 40 days in advance. There's no space for a voter signature. Importantly, in the condominium and cooperative context, it is secrecy of the ballot. So if you have to put people's name on there, we lose the secrecy. So that should not be on there. It must be uniform in color and appearance, except where we have different classes of voting. Not very rare, but somewhat unusual that you have different classes of voting where people would have different percentages and each ballot would be weighed differently. Typically, if a proportionate share ownership condominium, this could come into play. Get with your manager and walk through that process of how you're going to handle that. Typically, it's done by having a blue sheet for people that have a certain percentage, a pink sheet for other people. But work with your manager and obviously consult with legal counsel if there are additional questions. But again, pretty unusual. The double envelope system. What this provides is secrecy of ballot. So in that second notice of annual meeting, there will be a large manila letter size envelope. And on the outside of that envelope, there will be a line to write your name, to write your unit number, and to sign. That is in essence your limited proxy to attend the annual meeting. If in order to vote, you have to do all those things. So you should receive that in the mail as part of this second notice of annual meeting package. What you do with that is there'll be an inner envelope that comes along with the second notice. That inner envelope is your standard thing you receive in the mail every day, and that will contain the ballot, and there are no identifying markings. So as a homeowner, what I do is I sign, date, and indicate my unit number on the outer envelope. I then cast my ballot, place it in the inner envelope, seal it, put that in the outer envelope, seal it, return to the association. That's what each individual member should do. Why that's important is because when we get to the annual meeting, the association will collect the outer envelopes, either from ones that have been mailed in or people delivering them at the annual meeting when they check in. We'll verify nobody's turning in 2 outer envelopes. And then once all of those have been collected, we will appoint an independent committee who will sit in front of everyone and open the outer ballots, obviously verify the signature, verify the unit number that matches the roster, open the outer envelopes, place that in a bin, take out the inner envelope, place it in a separate bin. The separation of the outer envelope with identifying markings and the inner envelope, which contains no markings, is how we secure the secrecy of the ballot. Those outer envelopes are kept in a bin. That's part of the official records. Do not dispose of those, but those are kept and we're done with those. So we put those aside at the annual meeting. We now have a bin with the inner envelopes with no identifying markings. And inside each one of those inner envelopes, which have not been opened yet, is a ballot. We take that bin, we shake it up so that we don't know who's on top and who's on bottom. And then that independent committee opens the inner envelope and now has the ballot in hand. And there is no way to connect that ballot inside that inner envelope with no markings to the people that turned in the outer envelope. So that's how the secrecy of ballot is maintained. And then obviously once we pull out the ballots, we keep everything. We keep the ballots, we keep the inner envelopes as part of the election materials. But that's once we get the ballots, that's how we can start tallying the election results. Once the outer envelope, you place the inner envelope inside, the inner envelope is then placed inside the outer envelope and sealed. So the process I just went through. Always make sure to get that back to the association, either hand delivery or mailed. The impartial committee I just spoke about, again, you open the meeting. The first thing you do is you collect all those outer envelopes which contain the inner envelopes. Make sure there's none floating, because once we start the process of opening those, it's too late, right? If somebody turns it in after the fact, we're not going to be able to maintain secrecy of ballot. That independent committee will go ahead and verify the signature against the roster, make sure nobody voted twice, and then the inner envelope, if it does contain markings, is marked disregarded. Very important that's done. So we know if somebody inspects afterwards that that particular envelope and ballot was disregarded. All of these duties must be done at the meeting. So there is a process by which it can be done before the meeting, but it's complicated and still has to be open to the membership to view. For simplistic sake, unless you're a 1,500 unit condo where that would just take too long, my recommendation is to do it at the annual meeting. Counting ballots. So as soon as the outer envelope is open, the polls are closed, no more ballots. We talked about that. All envelopes and ballots, whether disregarded or not, all that election material I talked about has to be kept by the association for at least 1 year. So nothing gets thrown away. It's subject to official records inspections. Don't create an issue where there isn't one. Keep the outer envelopes, keep the inner envelopes, keep the balance. This is an election flow chart, which I'm not going to really go through in much detail, other than you will get a copy of this slideshow. Make sure you note that it's slide number 45. And go ahead and use this when you guys, if you come up to an election and want to get yourself familiar with the process, this is essentially what we go ahead and look at. So that brings to a close the election process, again, statutorily driven. I always say that it's difficult to explain, but once you go through it once or twice, it becomes pretty apparent of what you're supposed to do. Just make sure you're listening to your manager, because they're the ones that do it multiple times per year for all their different clients. They know the ins and outs, the nuts and bolts. So rely on their professionalism and their guidance. And if a unique issue comes up, always feel free to reach out to counsel. The next slide we'll get into is condominium record maintenance and access. So these are official records of the association that are subject to inspection by the members. This is under 718, 111, 12, and 61B 23 of the Florida Administrative Code. We'll go through what is an official record, and then we'll talk about official record inspections. So 718, 111, 12 provides the guidelines. Importantly, your official records must be maintained within the state. so we're not shipping them off somewhere else, and shall be made available within 45 miles of the condominium property or within the county in which the condominium is located. So if you use a management company out of Broward or out of Tampa or so forth, and that's where they store the documents, still within the state, absolutely fine. But if a homeowner wants access to records, it has to be made available within 45 miles. If the association, for some reason, doesn't have a clubhouse or a place where that can be made available, I always open up to my clients. I have a Vero office. As long as I'm within 45 miles of you, they can come to my office and inspect the records, make it as easy as possible. And except as otherwise provided below, the official records must be kept from the inception of the association. So we're not throwing away records. Condominiums and cooperatives, you need to be a hoarder of records and keep those unless otherwise designated. I will note that one of the questions we get a lot lately is, John, we maintain our official records by scanning them and then saving them to the cloud. I also have clients to save them to computer, which is fine so long as the computer is being backed up. That, in my opinion, does meet the requirements so long as you have access to the cloud and can provide those records either on a computer screen for the owner to look at, by emailing a copy to the owner for them to look at, or by printing them out and making them available within 45 miles of the condominium or cooperative community. So what must it include? Copies of the plans, permits, warranties, and other things provided by the developer, copies of the declaration, articles, bylaws, written policies, rules and regulations, things that are how we operate the association. The backbone of your community obviously should be part of it. All the meeting minutes, whether that is the board meeting minutes, whether that is an ARC if you have one meeting minutes, whether that is the unit owner meeting minutes, those should be kept. A current roster of all unit owners and their mailing addresses, unit identifications, which unit they own, voting certificates, and telephone numbers. The roster must also include email addresses and facsimile numbers for those owners who have consented. Note, I'm not telling you that email addresses and fax numbers are part of the official records, but if they've consented through a phone book or a roster, they've opted in to say you can let other members know what this is, then it's part of the official records. A current insurance policies, pretty apparent that should be made available. Copy of the management contract, any lease, any rec lease or other lease you have for property, a bill of sale or transfer of all property owned by the association. So if you guys own a lawnmower or a golf cart, there should be a bill of sale associated with that. All of the association's financial records, whether that's your cash receipts, whether that's your monthly cash flow statements, whether that's printouts from the association's QuickBooks, whether that's the account receivable report as to payment of assessments, whether that's the year-end audit. If it pertains to the association's financials, it is subject to inspection. All contracts for work to be performed, so that would be individual contracts, if you're having concrete restoration, copy of the Comcast contract, stuff like that. And in addition, bids, if you're doing competitive bidding for a particular project, those bids only have to be maintained for 1 year. So the contract itself, perpetuity, the bids that were not accepted, 1 year. Ballots, sign-in sheets, anything related to your election has to be maintained for 1 year. All rental records of the association where the association is acting as the rental agent, and a copy of the FAQ, the documents that disclose when people purchase in the condominium, that has to be made available. And then all other written documents related to the operation of the association. So realistically, this is a catch-all. If it is a written record of the association, be cautious, maintain it as part of your official record. There are some exceptions, attorney-client privilege that we'll go through. But if it's a written record of the association, maintain it either electronically or in physical form and ensure its availability if somebody wants to look at it. The miscellaneous category, I just came up with some examples here. Invoices for purchases, copies of insurance records, bid material. Renter of a unit has the right to inspect only the rules and bylaws. So this is a little bit of a nuance that unit owner can request any of the official records. A renter in your community, it cannot. The only thing they're entitled to is a copy of the bylaws and the rules. And as of January 1st, 2019, an association managing a condominium of 150 or more units, which does not manage timeshare units, must have a website and post digital copies of its official records on its website. That's not every official record. So take a look at the statute under 718.111 as to the specific items that you do have to put on there. That includes a copy of your governing documents and meeting minutes, basically. But always be aware that you are required to have a website and make those records available if you're over 150 units. If you're smaller than that, website's still not a bad idea. The association must provide a requesting owner without charge a copy of the most recent financial reports. You have 5 business days to do so. So if you don't mail out your year-end audit or send it in an email or a link that people can download, there's a 5 business day requirement if somebody requests one. And if a unit owner provides written notice to the division of the association's failure to provide this year-end audit report, there are penalties in place by the division. And that would include, you have to disclose the annual report to the department containing the names of all the financial institutions with which you maintain accounts, and a copy of the report may be retained by the department, and you are under the microscope of the DVPR. So don't make that mistake. Always go ahead and either affirmatively mail it out to your members or make it electronically accessible, or in the alternative, if somebody submits a request, meet that 5-day deadline. So we've talked about what is an association official record. The question is, what is not an association official record? Number one, attorney-client privileged material. So that would be my thoughts, impressions, legal opinions, unless the board votes to release a legal opinion concerning matters at the association. That is protected. I always recommend that clients have a special folder where they put the legal opinions, whether it be red, blue, yellow, green, but not putting the association's attorney's communications with everything else. It makes it easy when a homeowner wants to come in and inspect. We just take out the red folder, make sure they don't have access to it, and they can look at everything else. So important there. Certain information obtained by the association in connection with approval of lease, sale, or other transfer. This really relates to background checks. So if I own a unit in your condominium and I am leasing it out and you all run a background check because you're authorized to do so, other owners are not entitled to have access to that background check and know whether I've committed a felony or something else. So those are protected. Medical records of unit owners, this particularly applies to fair housing accommodations. If somebody is disabled and we have to make them an accommodation, that medical information is not subject to official records. And then obviously personnel records of the management company. The management contract is accessible. The individual manager's payroll, tax deduction, payment for healthcare, and so forth, not subject to official records. And then the obvious stuff, social security numbers, driver's license numbers, credit card numbers, email addresses, and so forth. Personal identifying information, which the homeowner has not opted in to authorize us to disclose, is not part of the official record, not subject to inspection. The question I typically get from clients is, John, we have a new tenant application or a new sale application that comes in. A lot of that information on there is subject to official records, right? But it has their credit card number or it has the copy of their driver's license. What do we do? My recommendation is you make the record available for inspection, but we redact the sensitive information. So that would be Social Security. If there's a background report, we wouldn't provide that. If their driver's license is there, we would redact that. So that way you have provided the information to the person seeking the documentation, but not provided the private information that we are not entitled to disclose. Email addresses and facsimile numbers are not accessible to unit owners if consent to receive notice by electronic transmission is not provided. So again, that is an opt-in. If I, as a homeowner, authorize you to disclose that information, you can certainly disclose it, but otherwise it is confidential. And importantly, there is a catch-all in the statute. that unit owners, or I'm sorry, the association is not liable if it inadvertently discloses email addresses or fax numbers that they did not have authority to do so. Again, the question becomes, what is inadvertent? And litigation always seems to ferret that out. It's expensive, so do your best to make sure you comply with that. Electronic security measures, that would be passwords to your programs used by the association, whether it's QuickBooks or something else, and then software of the association. Inspection of official records. The association's official records must be open for inspection to association members or members' authorized representatives at all reasonable times. You have 10 business days to, once you receive a request, to go ahead and respond. My recommendation is anytime we get a request for an official record, we stamp that in, we initial who received it, and then we calendar the deadline, and we notify the people that need to go look for the records to get to work. Having that procedure in place ensures that it's not a finger pointing game when the 10 business day deadline is blown. So very important when that comes in, whether it's certified mail, whether it's email, whether it's hand delivery, we stamp it, we initial it, and we start work that day and identifying people who we need to get in contact with to get that records available. And the association may offer the option of making the records electronically available to the members. So let me walk you through a hypothetical of how I recommend clients address records inspections. They receive an email from a homeowner who wants access to the cash flow statements or monthly year-end reports from the management company for the past 12 months. We get that via email or it comes in hand delivery. Either way, we print it out, we stamp it, we initial it. I received it as a board member. It's now received by the association on this date. I then send an email to the manager stating that I received it on this date. The deadline to respond and calculate the 10 working days or 10 business days is due by this date. Can you please start gathering the information so we can make it available to the homeowner? A letter will then, once we gather the documentation, hopefully it's not that laborious to gather, we then send a letter to the homeowner, whether it's email or regular mail, stating we've received your request, the records have been gathered, they will be available at this location starting on this date. Please feel free to stop by and inspect the same. And if you'd like copies, we'll go ahead and make those for you, of course, at a cost. And if it's more than 25 pages, then we'll go ahead and send out to Kinko's or FedEx or something like that, and we'll charge the cost of whatever they charge us to make those copies. That's typically how it's done. Alternatively, once the request is received, you can also go ahead and, if we have the monthly cash flow reports easily available, we could go ahead and just email them to the owner. Under the official record statute, there is no obligation to proactively make the records available to the owner from the perspective of making copies. They only have the right to inspect and at that point in time request copies. But because a lot of things are stored electronically these days, sometimes clients find it easier to simply just email the owner and say, there's no cost with email, here's a copy of what you've requested. So be aware of those two options. The association can adopt reasonable rules regarding the frequency, time, location, notice, and manner of record inspection and copying. Typically, I see clients put this into place when they have the homeowner who's submitting 4 or 5 record requests per month and making these poor volunteer board members run around, track down documents when they have more important things to do, not only in their own personal lives, but when it comes to governance of the association. So at a duly noticed board meeting, you can adopt rules that state, at a minimum, we will only accept 1 records request per month from each individual unit owner, and that they will have no more than 8 hours per month of our time to come and inspect the records. That's not 8 hours for us looking and them inspecting. That's 8 hours for them to actually review and go through the documents. So the case law in the arbitration context has said that those types of restrictions are reasonable, but you can't do something where you say you only get 1 a year. That's not reasonable. So talk to your counsel if you have any questions. I know our firm has a standard records request rule template that we use and recommend to clients. we feel pretty confident that that will be upheld by the DBPR if challenged. Copies. So I talked about the fact that you have to make the records available. They have the right to come in, inspect the records, and request copies. You can charge a reasonable fee for the copying, but you cannot charge simply for the inspection of records. So if it's 25 pages or less, I recommend you do it in-house if a copy machine is available, and you charge up to 25 cents per page. That, in my mind, I've litigated those cases, is something that I haven't had an issue with as to reasonableness. If it's in excess of 25 pages and would be onerous for the association to use its copy machine to go and take care of, that's when I recommend sending out to a third-party vendor to make copies, get an invoice from that vendor, and then deliver to the homeowner and say, your copies are available, but you need to pay the vendor invoice before we release them to you. Again, you can't charge a fee for the manager's time or board member's time to sit there and babysit the homeowner while they're inspecting records, only if they request copies. And as of July 1st of 2013, the member now has the right to go ahead and come in and use their smartphone, tablet, portable scanner to go ahead and take pictures in lieu of requesting copies. The thought is that they won't then incur the expense of the copies. Failure to provide access to records. This is one of the pitfalls that I talked about. What happens if we blow a deadline, John? We get the records request and somebody went on vacation and didn't tell the other board member, or didn't get it to the property manager. Well, if you don't provide it within 10 working days, you are out of compliance. Two things can happen. One, a complaint will be made to the DBPR, and I will have to get involved to defend you and explain why there wasn't compliance, right? So an administrative investigation can be instigated by the homeowner by filing a complaint. The other one is that the homeowner is entitled to statutory damages against the association. $50 per day once you get outside the 10 calendar days, or I'm sorry, 10 business days, up to a maximum of $500. And if they sue you in small claims court, you then have to pay, and they win, there's prevailing party attorney's fees that apply. So in the last case I handled where a client blew the deadline, it ended up costing them about $1,500 at the end of the day, because there was the $500 in damages, plus they hired an attorney and he wanted $1,000 for his time to file a small claims complaint. So be very wary of this. It's important to discuss with your manager and other board members what the policies and procedures are for official records requests, who's going to be responsible providing such information, who's going to be responsible for telling the homeowner they're ready to inspect. Those things are discussions. If you have them ahead of time, rarely will you run into a statutory violation issue. So that brings us to close the official record statute. I think it's important to know the breadth of what needs to be kept, and then the consequences of not complying with the 10-day requirement. Obviously, if you have any questions, go ahead and put them in the Q&A and we'll go through them at the very end. One miscellaneous housekeeping item before we get to our last topic, and especially applicable to associations in excess of 150 units, which now have to have a condominium website. About a year and a half ago, just before the coronavirus hit, many of our clients received demand letters from a disability advocacy group alleging that their association community website, which is now required by statute, was not compliant to make accessible to those who are visually impaired or those who are hearing impaired. And they alleged that that violated the Fair Housing Laws and Americans with Disability Act. None of our clients were ultimately sued, but as you can imagine, this disability advocacy group wanted money to go ahead and settle the claims, right? In my opinion, it was a money reach, but you have to know that there's people out there that probably don't live in your community that are doing these types of things, and we need to avoid even putting you in a position of risk. So the solution to this is, if you have a publicly accessible website, you need to talk to your website administrator to ensure, one, that the current website meets the WCAG 2.0 compliance standards. That is the latest and greatest website accessibility standards as it pertains to If I am visually impaired or hearing impaired, there's a special program on my computer I can use. And if your website meets this standard, it's already embedded in the metadata of the website. If you don't know, or you talk to your website administrator and they say, I have no idea what that is, talk to our office, talk to Brenda. There is I'll call it a widget out there. It's some sort of program that you can easily incorporate into your website, where it creates a little handicap icon in the upper right-hand corner. And it takes any existing website, and I think it's like $50, and it takes any website and makes it WCAG 2.0 compliant. So in essence, eliminates the risk of these people coming around and accusing you of not meeting it. I've noticed that certainly our firm's website now uses this widget. I've noticed the Florida Bar uses it, the Florida Supreme Court uses it. So something to look into and consider if you have a publicly accessible website, and again, mitigate that risk. All right, jumping into the last topic, about 15 more minutes to this presentation, and we'll get to the Q&A. Condominium dispute resolution. So this relates to any dispute between the association and a homeowner. It comes really in twofold. One is a homeowner who's not complying with typically your use restriction. They have an occupant in their unit who has not been approved by the association. They're leasing it out when they didn't have permission to do so, or in violation of your leasing restrictions. They're parking their truck in the condominium property, and you guys don't allow trucks. So that's the one side of covenant enforcement, where the association is essentially the police attempting to enforce your covenants. The other side of it is accusations by an individual member that the association is not complying with either a statutory or administrative code requirements, or in the alternative, that the association has engaged in ultra vires or breach of fiduciary duty, that you're not acting in the best interest of the association. The reason I point out the two sides of it is the approach of the association can be very different. If you are the police attempting to enforce the use restrictions, you need to be under the guidance of counsel as you walk through that process. I come into play when we get to the arbitration and litigation portion of it. Before that, you look to your manager for guidance. Your manager will typically send out a courtesy letter stating, hey, you live in a condominium. There are rules and restrictions to ensure the harmonious nature of the community. You're in violation of X. You have X number of days to fix this violation. It's nice. It's friendly. Most people will comply when they get that letter. However, if they don't, the next step I typically recommend for my clients is to have the manager send a second formal violation letter. It will acknowledge the first letter, state that we tried to be kind, but now the board has become forceful. If you don't comply within X number of days and fix this violation, the association may levy fines. The association may refer this matter to legal counsel for enforcement. That letter, probably by the time we get there, 90% of the people have complied with the request. If you get to the end of that deadline of the formal violation letter, it is really a fork in the road when it comes to enforcement. Option one, rely on your manager, is to go through the fining process under 718.305. The association can levy fines for non-compliance with its use restrictions of $100 per day up to a maximum of $1,000 per violation if it's a continuing violation. Fines are in essence the speeding ticket of the condominium and cooperative world. Nobody likes a speeding ticket. So it is a monetary punishment that is intended to encourage compliance. In order to levy fines, it has to be done by the board at a board meeting. A letter has to be sent to the homeowner letting them know that the board has levied fines of X amount up to an aggregate amount in total if it's a continuing violation, and give that homeowner the opportunity to appear before an independent fine committee who will meet and hear their side of the case. And that meeting must be at least 14 days out. I'm confident that Brenda and the people at Vesta have a template letter that they can use for that fine. And if you all are self-managed, always feel free to reach out to my office. We have a template letter that we provide to our clients, but it has to meet those statutory criteria: what the violation is, what the financial penalty is, and the notice and opportunity to appear before this independent committee. This independent committee has to be appointed by the board. It has to consist of at least 3 members, and it cannot consist of board members, their spouses, or people living with board members. The whole idea here is that the legislature wanted to have this independent committee that would not be subject to the board's whims to review when fines were levied and to hear the homeowner's arguments or excuses as to why fines should not be levied. That fine committee's powers at the end of the day are to give a thumbs up, we levy the fine in full, or to give a thumbs down, we levy the fine, we will not impose the fine against the homeowner. There is not the ability under the current language in the statute to only uphold half or something else. So the fine committee's jurisdiction is somewhat limited. But the whole point is you have an independent hearing where that homeowner gets the opportunity to appear, explain or justify why they were in violation, or perhaps show up and say, I'm sorry, but I fixed the violation, please don't levy the fine. And that committee independently gets to make a decision and send notice to the homeowner after it's done so to say we've either upheld it and it's now due, or in the alternative that we've declined to impose the fine. So I always recommend we go through the fine process because it saves on legal fees. The courtesy letter, the formal violation letter, the fine process, unless you just need a consult on, John, how do we do this process, typically doesn't rise to the level of working with your attorney. But if we explore all of those enforcement mechanisms and it does not result in compliance, that's when I get the phone call. And we say, John, what do we do from there? And the next few slides will walk through that formal process as to pre-arbitration notices, the letter that comes from my office saying we're going to file an arbitration proceeding if you don't comply, the arbitration process before the DBPR, and then ultimately litigation. Again, as a last resort, as we go up the hill of enforcement, it becomes more expensive for the association. So we try to mitigate that as much as possible, take baby steps before we get to the big one. A dispute, whether it's covenant enforcement or, as I talked about earlier, allegations of association wrongdoing, is submitted to arbitration before the DBPR based out of Tallahassee prior to going to court. Failure to comply with this arbitration requirement will result in dismissal of the lawsuit and the opposing side getting the fees. So if the association knew a homeowner was violating some use restriction and went and filed an action for injunctive relief in court without going through the arbitration process, their case would be dismissed and the opposing side would get their attorney's fees. The same with a homeowner. If they believe you've been violating some provision of 718, you didn't provide proper notice of meetings, you didn't properly pass a budget and went directly to court, the court could dismiss that case and award the association prevailing party attorney's fees. A dispute is defined as the authority of the board of directors under 718 or the governing documents to require any owner to take action or not to take any action. This relates to violations of use restrictions. The authority of the board under chapter 718 of the governing documents to alter, add to the common elements or common area. So this would be something where the homeowner accuses the board of wrongdoing. In the failure of the governing body, that being the association, when required by statute or the governing documents, to properly conduct election, notice of meetings, properly conduct meetings, or allow inspection of books and records. Again, so that is where the homeowner is accusing the association of wrongdoing. When you're at this point, always important to talk to legal counsel. There are some, by virtue of case law, exceptions to what has to go to arbitration. So important you talk to your legal counsel. You may fall into one of those. As an example, an unauthorized occupant or tenant is not subject to arbitration. Not really clear from this slide or the definition of the statute, but the case law defines that. So talk to your legal counsel on that. Also, what is not subject to jurisdiction? Title issues. So who owns a unit or who owns, whether something is a limited common element or a common element. That's title issues. That's not subject to arbitration. Collection of assessments. So if somebody's delinquent, we put the claim of lien in place and proceed with collection, not subject to arbitration. Eviction or removal of tenant, that's the case law I talked about. Alleged breach of fiduciary duties of the board of directors, not subject. And then claims of damages based on alleged failure to maintain the common elements, again, not subject to arbitration. At this point in time, you should be with legal counsel and they should be able to walk you through whether arbitration is a necessary condition precedent to litigation. This Ruffin case, the 4th District in 1998 held that a dispute concerning a tenant is not subject to arbitration. So that's what I was talking about. That has since been expanded to apply to unauthorized occupants of a unit. The division rules are under 61B-45. So if you get into arbitration, there are governing rules about how you file an arbitration petition, the deadlines to respond, discovery, and so forth, final hearings. That is all set forth in 61B-45. And the division also arbitrates disputes pursuant to 718.122J. This relates to recalls of board of directors. Not going to go into recalls in particularity, just know that if there is a recall, that you receive a petition to recall board members to pull them off the board because the membership is unhappy, you need to talk to your manager, you need to talk to legal counsel. There are deadlines that, if blown, can have consequences and result in prevailing party attorney's fees if there is an arbitration subsequently. Importantly, before we get to the arbitration, when it comes to me, we've sent the letter, the courtesy letter, we've sent the violation letter, we've levied fines, the homeowner's still parking their truck there, right? We don't allow trucks in our community, or there's an unapproved tenant staying in there, and we need to proceed. The first thing I do is sit down, gather the facts from you, look at the evidence, and I send a pre-arbitration notice. This is in essence another violation letter. It's another step in the process, but it's required by statute that I essentially have an attorney letter that goes out that says, we're going to sue you in arbitration if you don't comply. This is your last and final warning. You have 10 days. A little more substantive when I write it, but that's the point at the end of the day. This, if you do not send this letter and you file a petition for arbitration, it will be immediately dismissed. They will not have jurisdiction. They will say, you cannot come to us. You have to send the letter first. So just be aware of that. And then the petition for arbitration, there is a form you can download. There's a $50 filing fee. Again, if the association is filing a petition for arbitration, you need to be with legal counsel. We do this every day. We can walk you through the process. The answer, again, dictated under 61B-45, pertains to the timing of that. It's essentially 20 days once the arbitrator accepts jurisdiction. And importantly, if you want to go ahead and claim prevailing party attorney's fees, you got to plead it. Very important. This talks about pleading and mediation. There is the opportunity during the course of an arbitration proceeding. So we send the pre-arbitration notice, we file the arbitration petition, the arbitrator reviews it, says, I do have jurisdiction, it's a dispute under the statute, and then sends a letter to the respondent, in my example, the owner, that says they've accused you of XYZ, some covenant violation. You have 20 days to respond and tell me why they're wrong. That's essentially, that's the answer. At that point in time, the parties can jointly or unilaterally move and say, instead of having a final hearing, a mini trial before an arbitrator who's going to decide who wins, we're going to go to mediation. And if you go to mediation, essentially you get a free mediator who attempts to go ahead and resolve the party's dispute without proceeding forward in the arbitration. If you're unable to resolve at mediation, which I recommend almost every time to my clients, the arbitrator can dismiss the action and let you go straight to court instead of having to pay for a final hearing. That's this slide. Final orders. So if we go forward with mediation and the arbitrator decides to retain jurisdiction, or if we decide to skip mediation and simply go to a final hearing, it is a mini trial. There is evidence, there is testimony, and the arbitrator will render a final ruling. It is a zero-sum game. There is a winner and there is a loser at the end of these cases. Hopefully, the association ends up on the winning side. If the association wins, or even if the association loses, the losing side then has 30 days from issuance of that final order to appeal, quote unquote, that final order to the local court, whether it be county court or circuit court, but that's when you're actual in court with the judge, with the robe and everything like that. If you do not appeal within 30 days, the decision of the arbitrator, it becomes final and enforceable. And if you do appeal, it's deemed a trial de novo, meaning when I get up in front of the local judge now, they don't get to hear anything about what happened in arbitration. It's essentially we start from ground zero. So that is why, because there's the ability of a homeowner to appeal and again, essentially start again, get a fresh start, that I rarely push clients to go through with a final arbitration hearing. I usually suggest that we simply do mediation. If mediation results in an impasse, that we go to court and get out of arbitration, because it's simply another expenditure the client has, and the appeal results in us starting again anyways. Motions for attorney's fees. If you do proceed with a final hearing and you do prevail, you have a certain time frame, 45 days, to go ahead and file a motion for attorney's fees and costs. The other consideration when I talk about final hearings is these arbitrators are notorious for cutting attorney fee hours. So at the end of the day, the client has to pay what the attorney billed them to prepare for, attend, and prosecute their case. So if that's $5,000 to get through an arbitration proceeding, that's what the client has to pay. The arbitrator may say, well, I think that's unreasonable. I'm going to only award $3,000 or $3,500, right? Well, what does that mean? That means that we get a piece of paper that says that the loser has to pay us $3,500. And that's all we can get from the losing party. But the client's still on the hook to the law firm that prosecuted the case for the full $5,000. So because of the risk of a trial de novo, where we go to court and we start the whole process over, and because it's unlikely the arbitrator will award your attorney's fees in full if we do prevail, very rare that I push for a final arbitration proceeding. Again, mediation and get out. This goes through a motion is considered filed when received by the division, not when you put it in the mail. Very important when trying to meet those deadlines. And I talked about the de novo, the second paragraph there. Motion for rehearing and trial de novo. So if a party who files the complaint for a trial de novo, so we've gone through the arbitration proceeding, we opted to go through a final hearing, the arbitrator issued the final order, and then somebody files a trial de novo, meaning we now in the local court, the judge with the black robe, the party who files the complaint for trial de novo shall be assessed the other party's arbitration costs, court costs, and other reasonable costs, including attorney's fees, investigation expenses, and expenses of experts and others testifying, incurred after the arbitration hearing if the judgment upon the trial de novo is not more favorable than the arbitration provision. Practically, what this means is if you hire my law firm to prosecute an arbitration case and we go through and it's $5,000 and we win, and the homeowner appeals and then goes to the local court and says, I want a fresh start, and we try that case and you win that case too, you can get the attorney's fees from the trial court going all the way back. So there is that saving grace if we decide to go with that strategy. A party who obtained an arbitration final order, if it is not appealed and the homeowner does not comply, is then obligated, it becomes essentially enforceable. So if I get an arbitrable order that says you can't park your truck there anymore, Mr. Smith, because it's in violation of this use restriction, and they do not comply, I can then go to the local court. And because they did not appeal that, they don't get a trial de novo. They essentially, we go to court, the court says that you didn't appeal in a timely manner. I'm going to enforce this. And if you do not comply, Mr. Smith, I'm going to throw you in jail. So that's what that means by saying that if they don't timely appeal to a trial de novo, it becomes enforceable in the local court. Here's a note on the customer contact. I'm not going to go into the details on that, but know that it's slide 81 if you do have any further questions. Obviously, talk to your legal counsel, but if you're a homeowner and don't have legal counsel, that's who you can contact to discuss further. So that being said, that's the end to the covenant enforcement and arbitration process. If you have any questions, put in the Q&A. Just a few more slides on statutory updates, and we will be done here. So I appreciate your patience. Statutory update number one, very important. Prior to referring collection matters, so this is unpaid assessments, to your attorney to go ahead and handle the collection process. That's that putting a lien in place and foreclosing. There is now a new requirement that the management company on your behalf, or if you're self-managed, the association has to send a late notice to the homeowner stating essentially the statutory form. You have to be in substantial compliance with the statutory form, and they give them 30 days to go ahead and pay. The theory behind this, why it was passed, was there were few associations, of course, none of mine, they would never do wrong, and probably none of Vesta's, who, when the homeowner hadn't paid by day 10, would send it to the attorney, and now there's a $150 charge in addition to the unpaid assessment. They were a little aggressive, and the legislature found that that was inequitable. And so what they have now required is to say that before you send to the attorney and start incurring those additional fees, you have to send this late notice in this format, and you have to give them 30 days to pay. And if they don't pay after that, send it to the attorney and charge the fee and everything you want to do. So just be aware that that exists. Our office and our collection policy is that when you turn it over to our office for collections, where we send the intent to lien letter, wait 45 days, and then send the intent to foreclose letter and record the claim of lien, is as a condition of us proceeding off the bat, we want to see a copy of this letter and make sure it complies with the statute. That way we don't get halfway in and realize that something's not right. The other change was to transfer fees. You can charge now up to $150 for a transfer fee for a lease, sale, or other transfer of property. Importantly, that has to be authorized by your declaration or bylaws, and you can only do it if the association is required to approve the transfer. So if the association has no approval or disapproval rights, you cannot charge the transfer fee any longer. Change to 718.116. Owners now have 45 days. This is collection when it's with my office. 45 days, previously 30, to pay the intent to lien letter and the intent to foreclose letter. The idea is the HOA statute, which had always required 45 days. We've now essentially brought those into parallel form. So cooperatives and condominiums, you're going to have to wait an extra 15 days when it's with the attorney to go ahead and let the owner go ahead and pay. Not the biggest deal in the world. Adds about 30 days at the end of the day to the collection process. And then the last one, and probably the most important one, is amendments to 718.1265, which again are the emergency powers of the association. In the wake of COVID, where we had condominium clients and cooperative clients shutting down common facilities, that was done with certain risk because the statute did not expressly allow you to rely on the recommendation of public health officials, whether that be the local municipality, whether that be the Florida Department of Health, whether that be the CDC, to implement emergency measures to protect the health, safety, and welfare of the community members. You can now, pursuant to statutory amendments effective July 1st of 2021, rely on the advice of public officials. So you now have the authority to do so. That being said, the question I've been getting a lot lately, and just a little free tip, is the Delta variant is very prevalent. John, can we close down our gym again? John, can we close down the interior portions of our community? Previously, our firm had opined that that could be done because the governor had implemented a state of emergency, much like when there's a hurricane event, for all of Florida due to COVID. And that stayed in place for over a year. We relied on that emergency declaration to state there is a state of emergency, and I believe it's subsection 1H or J allows you to close portions of the condominium when a state of emergency is declared. As we sit here today, there is no longer a state of emergency in the state of Florida. Therefore, it becomes very questionable as to whether the association can restrict access to portions of the condominium complex as we sit here today. Obviously, if the local municipality or the state of Florida goes back and declares a state of emergency, I think that power will come back. But as we sit here right now, there is risk associated with that. It could be challenged, and I cannot tell you with confidence the outcome of what a local judge would do. So just be aware of that. That's the statutory update. That is not everything by any means that was changed in the statute. Again, I encourage you to request from Brenda, or when we email you the certificates, get a copy of our Reb Law review with all of the statutory updates, review, digest those. If you have any questions, contact Vesta, contact your local attorney, and discuss and say, hey, how does this apply to our community in particular? So with that being said, I want to thank you very much. I will go ahead and stick around and take Q&A from people that want to stick around. If not, you are free to go. I appreciate your commitment to your community, to be here today, to get your educational certificate. And I want to extend a special thank you again to Vesta for giving me the opportunity to appear and meet some new faces. Thank you.
Thank you so much, John. We've got about 12 questions today. So the first is from Robert. How accurate is the statement? Reserve funds should only be used for replacement projects, particularly roofs. Operating funds should be used for repair projects to repair roofs. And he's got a couple of follow-up questions to that as well, but I'll let you go ahead and answer that one.
So I'm going to talk in generality, right? End of useful life of the roof. The contractor says we can't save it anymore. We can't put any patches up there. We have to replace the roof. That's a reserve item. The day-to-day stuff where there are minor leaks where we have to come in and patch it or pull up some shingles and put down some new asphalt is typically considered a day-to-day expense. So that would be the difference between reserve and operating.
Okay, so his follow-up question was, is a more extensive repair of a roof that ostensibly extends the life of the roof a legitimate reason for paying for the extensive repair out of reserves?
So I think it depends on the specific facts, but if you take a look at the definition of capital expenditures, extending the life of a current reserve component falls within the definition of something that you can reserve and use reserve funds for. So again, if we're paying for a $5,000 repair that extends a minimal portion of the roof, probably not going to fall within the definition of capital expenditure. But if we're replacing tiles but don't have to replace the sheathing, and that's going to give us another 5 or 10 years on our roof, I think that a good argument could be made that's a reserve expenditure. Good question.
And he also asked if a roof repair under $10,000 that was paid for from reserves, he's asking if that is not proper or legal.
Well, the $10,000 is the repair at the end of the day for the component in its totality. So that's not the hard line to say that, well, if we replace all the roofs and it's under $10,000, does it or does it not constitute a reserve? Number one is realize that reserves for roofs don't have the $10,000 requirement. You're required to reserve for it if it's $5,000 or $500,000, right? And two, it depends on the replacement of the component in its totality. That's where the $10,000 figure comes in. So if the association only had to spend $8,000 or $9,000 on a particular roof that goes to extend the roof, the life of the roof 5 or 10 years, I think the argument can be made that's a proper reserve expenditure.
Okay. Next question, there's a shared recreation amenity, and this is a long one, for 2 condo associations. One building is completed, the other building is still under construction. What is the timing for when the new building starts to contribute to the operating reserve funding? How does the existing building protect the investment and the amenity reserves that the existing building was contributed for 18 years?
Gotcha. So Dwayne, it's an excellent question. It's going to be document specific. So there's either going to be a rec agreement that exists that's going to dictate that, or it's going to be specific provisions within the governing documents of each condominium association, or if there's a master association that governs that area in its totality, that we would look at and analyze and say, hey, here's when things become effective. So sorry I couldn't get you a specific answer, but certainly our office is always available if a new client wants to come along and get some questions answered.
And I think the next one from Jeffrey was early on in the presentation when you were discussing condominium budgets. Jeffrey asked for a site for condo budget.
Yeah, so we can go ahead and Jeff, if you want to go ahead and when we send you the certificate, just shoot an email and say, hey, I asked this question. I'll send you the exact link. I know before the presentation, I Googled, if you Google, do a keyword search for Florida Condo DBPR budget, it's the first result that pops up, and it's about an 86-page PDF that you can look through. It's also on the DBPR website, but unfortunately, their website's not very friendly to work your way through. So I think Google is probably the easiest way.
And I think you went over this during your presentation, but the differences in line item versus pooled reserve accounts.
Yeah. So it's the difference between I'll call it straight line reserve, right? Is we reserve individually for each different reserve component, no flexibility, but simplicity, versus a pooled reserve pertains to maximum flexibility, but additional cost because it's complicated to recalibrate that when you do start pulling money out.
And Zinzi has a question. If the association is still under developer control and they want to change their reserves over to pooled reserve, how do they go about changing that?
So it's going to be document specific pre-turnover. So my suggestion would be to go ahead and talk to the developer and explain the concerns and why you would like a pooled reserve. Once turnover occurs and the members are in control, it requires a membership meeting. It requires you establish a quorum at that meeting, and a majority of those present vote in favor of essentially taking a straight line reserve and converting all the funds into a pool reserve. And then you would then begin to calculate the pool. So I'll just talk about post turnover, talk to your pre-turnover, talk to the developer and see what their rights are under your declaration. But post turnover, member meeting, quorum, majority of those present. Good question.
Next question, does the entire portion of reserves need to be transferred within 30 days or only the part that has been received through assessments?
Well, so it depends where the money's coming from. So if the money is coming from checks from homeowners towards, for example, the July assessment that came due July 1st for most of our clients, you have 30 days from when you receive that check to go ahead and convert the portion of that check into or put it in the reserve account. So I'll defer to the management companies and how the particularities of the timing of that, but the statute provides 30 days to do so.
Okay, and are the rules the same for developer controlled boards
No.
with regard to election criteria?
No, they're not. So the election criteria apply post turnover. Pre-turnover, it is governed by the association's governing documents. Typically in a condominium association, and again, typically not every case, the developer holds all the seats on the board, and there may be one seat that has a member representative on there. But it's pretty unique pre-turnover, and it's document controlled rather than statutorily controlled.
Next question regarding the correct name of committees. Is it hearing committee, fining committee, or hearing and fining committee?
It is whatever you want to call it, so long as it is an independent committee. I have a lot of clients, the statute refers to a fining committee. So if we're going by the book, that's what I would call it, so there's no confusion. But I have a lot of clients that call it the enforcement committee or the covenants committee or the appeal committee. So I don't think the name necessarily matters, although the statute refers to a fining committee. The big thing is it's duly approved by the board of directors. I have meeting minutes showing where we appointed the members. Those members are independent, and those members conduct the meeting and keep minutes and notify the homeowner of their decision. Those are the big key aspects.
Is the association required to maintain the inside of a lanai or just the outside?
So a document specific question, right? What is a limited common element? What is a common element as defined by your declaration? And what are the unit boundaries defined by your declaration? Typically, I look first to the unit boundaries, which will tell me the extent of a unit. In the condominium context, there are three areas of the condominium. There are the unit, which is the unit boundaries defined by the governing documents. There can be, but is not always, a limited common element, which is a common element for the exclusive use and control of a particular unit or units. So typically you see that in the form of lanais, patios, breezeways, and so forth. And then everything else is common element. And so we need to look at your individual documents and determine, is the lanai defined as part of the unit? If it is, then that's typically a unit owner responsibility. Typically, but look at the maintenance section of your declaration. If it's a limited common element, then it could be either. And we have to look to the maintenance section of your declaration. And if it's a common element, it's probably the associations. But again, I defer back, look at the maintenance obligation section of your declaration.
And the last question, if a homeowner's AC is leaking to a unit below causing mold and mildew, and they say they're not going to fix it, is there anything the board can or should do?
So the answer is number one, you need to be with legal counsel. Mold and mildew are huge issues. And unfortunately, most condominium master policies exclude coverage for pollution and bacteria and fungi, which means that these are the types of claims where there may not be full insurance coverage. So we need to get ahead of the game on mold and mildew. Most association governing documents dictate in the maintenance section who is responsible for the repair, replacement of the HVAC units. You need to take a look at that. If it says, and what we see typically is the homeowner is responsible for the air conditioning unit and components thereof, even if not included within the unit boundaries of the unit itself. So that means that if there's a compressor outside or there's lines that run through the common area, that homeowner, if that language exists, would be responsible for all of that, even though portions of that AC unit are not within the unit boundaries. But if it doesn't say that, then there's a real possibility that under the general maintenance obligations, associations are responsible for lines, ducts, plumbing, utilities that run through the common elements. So I think you need to take a look at the maintenance obligations. I think you need to be in consultation with legal counsel. It's better to be ahead of the game and deal with a $2,000 or $3,000 mold mildew repair than, put your head in the sand. In a year from now, we have a $15,000 to $20,000 mold and mildew claim that is not covered by insurance. So be proactive. Thank you.
Thank you very much, John. And that is all of the questions.
All right.
I did enter into the chat down below a link to our website, which shows all of our past webinars. If you any of the attendees today want to sign up to any of our future webinars, please visit that website. It's vestapropertyservices.com/webinars. And again, John, I want to thank you for the presentation today. Again, you did a great job.
Thank you.
Brenda, if you want, I'll go ahead and pass this over to you if you have any closing words.
I just want to thank all the participants that joined us today, and I feel it was very informative. I really appreciate John joining us and getting everyone board certified. So thank you very much, and I look forward to working with you more and seeing hopefully these board members at one point or another.
Sounds like a plan. Thank you, everyone. In about a week, you'll have certificates. All right. Be well and stay safe.